Hello everyone, this is Teddy Keckstaff from Forex Trading Unlocked, and we are here today on Tuesday, February 16th for a live Forex Trading Analysis Turnaround Tuesday edition. Before we get into everything, we want to show you our disclaimer. Please take a look at it real quick. And this is just to remind you that this webinar is for illustrative and educational purposes only. And if you have not done so, please subscribe to our Forex Trading Unlocked YouTube channel and Twitch channel. That way you will be notified when we come live, whenever we do during the week and during the trading hours, especially when we have big events coming up, which we have one coming up tomorrow, which we will let you know about. So, okay, there's our plug, and also check out the book High Probable Japanese Candlestick Patterns, available in Kindle and paperback versions on Amazon.com. All right, let's go to our live action screen here. We have the Forex-Trading-Unlocked.com website pulled up already, and we already have our workstation page set up for you. We're going to skip past the economic numbers, and we're going to take a look at what's going on. So we're coming off of a holiday market from Monday that was a very dull trade because the U.S. markets were closed. Currencies really didn't get very much action. As you can see today, however, once the markets opened last night, we did get a rally against the dollar. As you can see, the euro posted a higher move high today after a higher move low that was done on Friday. Now today it's kind of settling right there in the middle of the trade, as you can see, and we're kind of coasting. We had a buy signal right here. This bottom right here, this was a bullish engulfing line right here. So for those of you that are unfamiliar, a bullish engulfing line is a it's a Japanese candlestick pattern, and this happens to be a buy signal. All right, so so far, we actually had last week touched our target 1 level that we had established already. In fact, we are going to show you something here on NinjaTrader. I don't know if any of you are familiar, or of our viewers, with NinjaTrader. It's a great charting platform that you can connect your Forex futures and equities accounts to and trade directly from your from the charts. We're not going to get into that today, but what we are going to look at is how we had already established from this bullish engulfing line these two levels right here. So as you can see, we touched this $21.49 last week. Today we pierced through it. So we have been making higher move highs and higher move lows, as you can see on the daily basis. This upper 121.95 is our next upside target. So the question is does this euro have the bullishness to make it back up there? So let's go back to our chart right here. So we've established that we've hit the target 1. This $21.92 here would confirm a higher move high after a major lower move low. Currently on the hourly and daily basis, we've been making higher move highs and higher move lows. It looks like it's starting to wane. The hourly definitely has shown, we'll pull this up right now, a few hours ago, this was a sell signal right here at $1.21.5. Now the market's trading here at $1.21.08. I think that maybe for the day we don't have much left in it for the trade. I don't know. We'll see. The markets are pretty quiet after the U.S. Open. The one reason you have to go be a dollar bull, however, is that right now, let's see what the Treasury bonds are at. The 30-year Treasury bonds have been just tanking. Let's see. We got the CME website pulled up. We're going to pull up the interest rates. And here we go. We have the 30-year bond is down one whole full basis point plus another 14 ticks. Those would be pips in Forex terms. That's a big move for the Treasury bond market that was closed basically since Friday. And also remember that interest rates are a function of currency pricing. So even though the interest rates with the Fed and the banks are remaining restrictively low, the market is now dictating higher rates. And the fact that the Treasury bond, 30-year bond, is down another full basis point to a full handle. That's a big deal. So that's 32 ticks plus those 14. That's a 46 tick move for the futures contract, for the March futures contract, which is the front month, which is definitely helping to give the dollar a boost. So usually there's different reasons the interest rates can make the currency swing, but it's because of the fact that the spreads are so tight with the short terms. The spread is now widening in a very big way between the very short term and the long terms. That's giving the dollar a boost. So we'll see how this is impacting these currencies. So right now we have established that this buy signal here that was part of this downside correction. Remember, the euro US dollar is an overall monthly, weekly, and daily, monthly and weekly bull. Daily, it's been in a corrective phase for a while now, since the beginning of January. And now in the beginning of February, we've gotten a nice bounce. So the question is will the big euro bull come back, or is the US dollar bull going to start to come into play? Now we have divergence in currency pricing right now with different currencies, basically because of commodity-driven reasons. So when you get to the Canada, the Australian dollar, New Zealand dollar, and those are definitely impacted because they're highly one of their biggest products is raw commodities. So, and the U.S. is also impacted by oil, but not so much as it is these other currencies are. And we'll see how that is going. So right now we have the euro a little bit on edge on the hourly basis. It did make a higher move high. So on the daily and hourly basis, we are bullish, but right now it looks like it's starting to run out of gas. Remember, we did have the NinjaTrader platform pulled up here. Now, here's something that you might want to take into consideration, and this is why I like using this NinjaTrader. See how we've established this was our target zone. We had already hit our first target, and we were long this, currently still long the euro US dollar. We've raised our stops to right here where this low is here at this where this point is, which, by the way, if I were you, if you are currently long the euro US dollar, then this would be a, where do I want a horizontal ray. That's what I want. Okay, so here we take this low. All right, so out there. All right, so this is where around where our stop is right here. We actually have it just a few pips below this low. So today we made this higher move high. So on an hourly basis, we're still bullish, but it looks like the sell signal is starting to occur. Should we take out the low from Thursday here, which that would be a very negative indication. Let's see, the low on Thursday was it 120.81. So a failure from 120.81 would definitely have the euro US dollar back on edge in a very big way. However, we still have this making higher move highs and higher move lows. So if we take this high from the bullish engulfing line and we go to our low here, we can establish a risk reward level, and that would be up here. And we're going to pull this out. Oops. Okay. And this establishes a whole nother target. Excuse me. So for an extreme correction, so let's just say that we maintain the higher move highs and higher move lows. Remember, the trend is your friend. Currently, that is the direction. Today's sell-off could just be a profit-taking move. So 122.43 up here, that's our extended upside target. However, if we fail from here, let's get this down a little bit better here. Okay. If we fail from this low here at $1.2081, well, then we're definitely going to start to see this bullish. However, we are looking for possibly a potential turn back to support. We'll start to see why in a little bit. Now we have British pound. You want to talk about a raging bull. Do not try and fight this one, folks. One of the reasons the British pound US dollar continues to rally like it does, most likely is because of the oil trade. As long as oil is progressively going higher, and I would not doubt it if we see $75 barrel oil, I would say at least by June, or at the most by June, but probably is very likely that we could see $75 a barrel by May. Maybe even in April. So with the current administration stance on oil and the fact that, well, they're trying to literally put oil out of business and so quickly. So The ramifications of that will have yet to will unfold, but this is all good for British Petroleum and a bunch of other companies around the globe. So as we lock up U.S. oil, we are giving other global companies a huge advantage, and this will have an impact on currency pricing. When you talk about the Canadian dollar, the Australian dollar, a little bit the New Zealand dollar as well, and definitely the British pound. Most people don't think about the UK when it comes to oil, but when it comes to the UK, they're a currency giant and they're also an oil mammoth giant. So it's definitely a factor in their trade. So today I would key off of the high. It made a higher move high once again. This thing is a bull. I would say that if you are an aggressive or just getting into the market, being long this market, or if excuse me, you've already been working a position, key off the low from Thursday. Anything below $1.3775 will have you in a short-term corrective phase. Remember that this market is a bull. We have this upward sloping trend line here that's going to a support line that's going to hold up the trend. A failure from here would have us looking to target this $35.66. Even if we fail from there, we have this long-term upward sloping support line that's holding the trend intact. That's probably the extreme for any sell-off. Even if we were to have a huge bullish turn in the US dollar, meaning that there's all kinds of factors weighing that the dollar should rally against all currencies, it's not going to probably have that much of an impact on the pound. I think the pound will remain a bull for a while, especially now with the current administration, with the way things are going in the United States. I don't see any major sell-off. Now, we will have divergence, and we already started to see this, where the euro may fall against the dollar now, and the pound will continue to rally. So be very cautious trying to become a bear with the British pound US dollar. So now, one of the things that you have to take into consideration why the dollar is rallying once again is the US 30-year Treasury bond. So since we've been talking, it's actually bounced back a few ticks. It's only down one handle and 9 ticks. So that's 41 ticks altogether on the day. So, but for it to come back a couple ticks is no big deal. So, but anyhow, the British pound US dollar, this one we do not have any real, I would say, points yet that we can look at for the upside, except for it's a grinding bull, you know. So if you're long, look for some nice, just hang on and enjoy the ride. As far as any downside corrections, I would look for any nice little move that you get, a nice little sell-off. Like, for instance, if we can get down to this upward sloping support line here, that might be a good area to buy back into and look for another pop. So we're basically in a buy break forecast for the British pound US dollar, even if the dollar becomes a bull. Unless you see a big sell-off in oil and a rally in the 30-year interest rates, I don't see the pound getting any significant sell-off. Now, should all of a sudden, miraculously, the U.S. president change his point of view on oil, and stop being so restrictive, then you may see a turn back to lower prices. However, we know that that's not going to be the political plan is to destroy the oil industry. So it's not going to happen as far as the U.S. So we're just going to we're going to stick with the trend and ride the oil trade. And as far as interest rates, they can keep interest rates all the way at zero all they want. The market now dictates higher rates after what we went through in 2020 and the businesses that are collapsing, with even CNBC announcing that upwards of 40% of all businesses currently still open will be shuttered before the end of the year in the United States. That does not bode well for credit, let alone the extension of credit. So expect interest rates to continue to rise, especially for any type of business lending, which will become more restrictive, which will also help to fuel more and more inflation in other commodities and other markets as we move forward. So the bull remains in the British pound US dollar. Let's see what we have going on here now with the next one. We're going to go to the US dollar Swiss. At least we're going to try to here. Let's go back here. US dollar CHF. Okay. This market is coming off a nice little correction. Overall, it is a bear. The dollar is definitely a bear, and all these currencies on the monthly and the weekly still Daily, the U.S. dollar has come back a little bit over the past week and a half, but it looks like it's trying to make a turn. I think the dollar strength here is where you're going to see a little bit of a bounce in the U.S. dollar Swiss, but not, this will remain to be seen. So right now we're using this low from today as our basis point. Anything below the low of today would have us hard pressed on this 88.36 level. A failure from here has the daily, weekly, monthly all coinciding and on the short term with a bearish market. So if there's a big turn in the U.S. dollar, where for instance we have a big sell-off in oil and a rally in interest rates, then most likely you'll see the U.S. dollar Swiss start to fall back on its lows. However, with the EU having all of its financial difficulties, and now with post-Brexit where the UK does not have to contribute to bailing out Italy, Greece, and all these other countries and be following these plans that the EU wants to do moving forward, that's another reason why the pound is so strong. It doesn't have to pay for the EU anymore. It's done. It's gone. They have their own sovereignty once again. They have their issues, but they're UK issues and not the rest of Europe's issues. And they got problems over there, that's for sure. Especially because they've seen more inflation in Europe in the past month than they've seen in the past 5 years. But then also we're seeing that here in the United States as well. So, but remember, people voted for that, and that's what we got, and now that's what we have to live with. So trade accordingly. I have to say, the past couple months have been great with the oil options. I'll tell you that. That's for sure. It's almost like a layup. You just know it's going to happen, which is rare in the markets. So U.S. dollar Swiss key off the 90.48 level. Any breakout above here through resistance would bring back the bulls in a big way. This, I think, what you would get is if you continue to see oil rally and if you continue to see the 30-year interest rates pound the lows, then it will be hard for the U.S. dollar Swiss not to come back towards a bullish mode. So right now we're waiting for a signal. We had a sell signal here a couple of weeks ago. This here is a bearish engulfing line sell signal, another high probable Japanese candlestick pattern. Remember to check out the book, High Probable Japanese Candlestick Patterns, on Amazon.com. So we actually hit our first target down here. This is kind of like what the euro did. It's already hit last week to our first targets for the dollar sell-off, and now we're pretty much bobbling, trying to just kind of feel the waters, and it looks like the dollar strength is about to come back in. Speaking of dollar strength, let's take a look at this. The U.S. dollar Japanese yen. Wow, look at what it did today. It's maintaining our upward slope here. This is a nice almost 45-degree angle, very manageable correction to the upside. Remember, the U.S. dollar Japanese yen has been on a monthly and weekly bearish trend. The daily trend, obviously, higher move highs, higher move lows. We have a higher move high today, confirming the bullishness of the U.S. dollar Japanese yen trend. Especially with oil continuing to rally. I know I'm hammering these commodity numbers, but remember that commodities are also a function of currency pricing, especially with what we have going on as economies are trying to come back on full capacity. Remember, travel around the world still, I know all the U.S. airlines is hovering right around, just around 50% of what it was pre-COVID. So you're going back to 2019 or January of 2020. So we have a year now where we are looking at ahead being, can we grow with travel? Is that possible? Well, if U.S. dollar strength comes into play, it'll give more incentive for people to travel, especially to Mexico with spring break coming up. We'll take a look at that one in a little bit. So anyhow, U.S. dollar Japanese yen, what do we do with this? That's a good question. That is a very, very good question. We're going to keep on watching this trade. It is a bull. I would not try and jump in front of this freight train for sure. I don't know if there's any of you out there in the chat rooms, if you guys are U.S. dollar yen guys or not. Do any of you guys trade it? You can go ahead and jump in on the chat anytime if you want. So right now you guys are not as questioning. You got a couple nice comments, but not any questions like yesterday. And yesterday was the dead trade. Everyone's trying to force a trade on a holidays, and kept saying well, there's nothing there for you guys. All right, so U.S. dollar yen, what do we have here? Like I said, we're just going to keep on following that one. Let's take a look at our Ninja Trader here. We're going to pull this one up. Well, let's try that extension formula. when we had this earlier buy signal down here, this was a piercing line on the daily. We used that extension tool, and it worked out really nice. So we did have a short-term buy signal here. Now, this is one that if you read the book High Probable Japanese Candlestick Patterns, you would be able to see how this works. Now, let's go from here to here. All right. So with this tool, it looks like right now what we've done with the yen is we've already exacerbated our upside targets. Okay, so does that mean that we can't keep on going? Absolutely not. What it means is now that I think this corrective phase with the dollar is more than just a corrective phase. But we have divergence in currencies. So remember that the dollar index, the euro, and the pound are the two biggest components. So with the pound rallying, it's hard for the dollar index to look very bullish. Okay, so if the euro is neutral or even slightly higher on any given day right now, and the pound continues to make new highs, the dollar index is not going to be the best gauge for which way the other currencies are going to go. Let's see, we got a question from Captain Will. Do you show the technical indicator you use? I'm not quite sure what you're talking about from where you jumped in on that. Right now, what I use mostly is for entries, I use Japanese candlestick patterns for buy and sell signals and for continuation signals. I do have some other methods that I apply. As far as indicators that I use, I don't use very many indicators. I use those for confirmation for long-term signals, just because most indicators are lagging. So what I like to do is use the most present price action. I always say that the best indicator truly of the markets is the market. So when I look at any of these currency crosses, like for instance the dollar for the yen trade, I look at it as in reference to commodities and also relationships with other currencies. So that's what I use for most of my technical indicators. It makes it very easy as far as, because it is what it is. It doesn't get too overly done with math. That's one thing you have to be careful with when it comes to all these, like, whether they're lagging or somewhat forward-moving indicators, is that the math for all of them is very similar. So over time, you come up with a lot of the same results from different type of approaches because of the way, it's just the dynamics of averaging, which is what most indicators are basically drawn off of, some sort of average number. So, but that's what I use. I use the high probable Japanese candlestick patterns for the most part. For instance, let's go back to our Euro US dollar. You know, as we can see, we have this bullish engulfing line here. If you're not familiar with that pattern, you can read the book High Probable Japanese Candlestick Patterns that I've written. It's on Amazon, or you can just Google the thing. This is not going to be a lesson today in the dynamics of each pattern. But so that's one entry. So like this got us in on this trade here. We are still long one contract. We got out last week just below this high here for the short-term target one trade. In fact, if we look at, I think I have it up on the, no, that's the yen trade. Let's see. Here we go. The Euro US dollar chart here on the Ninja Trader. Yeah, our second target here is right here around, well, it's actually $1.2115. This is $1.2119 on this chart. So we're looking for any extension here, and most would be up to this level. However, with our Ninja Trader risk-reward projector, we have $1.2243 as the extreme. And I would say that for sure, if the dollar is going to be a bull versus the euro overall over the next couple months, this zone up here is the high point of what I would say you're going to get to within the next week or so before we start to see newer move lows. And with the way today's trading, it's a little choppy. It's tough right now. You're making higher move highs and higher move lows, so it's hard to fade this bear. You always want to trade with the trend, and right now this one is it's a little choppy. So like I said, we're still long. However, we raised our stop up to where this low is here. So as far as indicators, Captain Will, a lot of what I use for indicators for managing trades is definitely prior swing highs and swing lows as you work a trade. And then I have also trading rules for as far as it has to reach a certain point towards a target direction before I even put a break even or start to adjust a stop. So I don't. I try to keep winners. I try not to let a winner turn into a loser, but also you have to give a trade time. So I have certain rules for that, and as long as I stay disciplined on them, they usually average out to in a good way. All right, so let's get back to these other markets here. We left off on the yen. Australian US dollar just got an interesting little bit of action going on here. Okay, so what do we see with this? Okay, we have a potential bearish engulfing line sell signal forming today. If we head back towards the lows of the day, that would give us, on the hourly basis, a short-term sell signal. And then if we could take out this low from a couple days ago, that would have us looking to lean on this upward sloping support line. Now, this is a line that's fairly close to 45 degrees. It's a decent, nice, stable line holding the trend intact. It's very likely by attrition that we will cross through it no matter what if we just go sideways. So key off the 78.22 level, any rally above here, obviously the long-term bull is back. Right now it has been making higher move highs and higher move lows. Use caution. If you are a aggressive short, now would be the time to do it. I would wait for a lower close than, let's see, we'd have to get below 77.65. So basically we have to settle just where we're at or lower right now for this to be a short-term hourly and daily sell signal. And then you would want to be using 78.22 as just above that as your risk for your stop, which is actually a low risk short, fading the trend. Normally I would say try and find a trade with the trend. We're not trying to pick a top here. I never try and pick a top or a bottom, but with a sell signal that's valid, at least on the hourly. And remember that with interest rates going where they're at, that's going to start to put a lot of pressure on all the currencies with the dollar getting bullish like that. If we see another dollar break in the bonds tomorrow, let alone another, if it gets down another 1 or 2 full basis points over the next couple of days to the end of the week, it's going to be hard to not be a dollar bull. The only thing it would be is if we have an extreme rally in oil that would hold up the Australian dollar, US dollar. Now, especially if we have a pullback in oil at all this week, and we have oil numbers that come out tomorrow on Wednesday, so you got to be careful. In fact, speaking of Wednesday, if you go to, let's see, thought I had it pulled up here for you guys. Maybe I didn't. Oh, yes, I do have it pulled up. Okay, so if you go to our website, forex-trading-unlocked.com, obviously on our homepage you can see us streaming, which we're streaming this right now, and we usually have our weekly analysis up here. And by the way, if you want to download NinjaTrader for free, you just go to our tools bar on the nav bar, hit NinjaTrader trading platform online, and you can go down here, give you information, and then you can download it for free. But what we want to see right here is if you go to our Forex market analysis page, we always have past videos we did. We actually have our streaming and recent stuff. Here we had a video from eoption.com. But here you can see us every Wednesday on tfnn.com. And we had a big discussion about interest rates and what have you. I would say if you get a chance to check out this webinar or this interview from last week. I'm tongue-tied this morning. So it was a really good discussion about what's going on with interest rates and the currency markets, and especially with gold and the equity markets. And we're on there almost every Wednesday at 9:40 on tfnn.com. So I would say if you get a chance, check it out. And you can always access it from our website as well. So anyhow, we talk about how oil comes in, and actually right before I go on that segment every Wednesday, we get the oil numbers. And Tom and Tommy O'Brien, the hosts of the show, they always go over them, and then we end up usually showing or talking about how it interrelates with the currency markets. So Australia being a big oil exporter, and now with the U.S. being basically getting shut down slowly but surely, where we are now going to be importing oil again, this is huge for Australia. It's absolutely huge. So we are no longer going to be sending oil to Japan. This is huge for what our relationship with Japan as far as the yen, and even business-wise, because stability, when you have, especially we're a regulated oil producer, our tankers aren't dropping bilge into the water and all kinds of stuff. So we're not contaminating the environment like these other producers are. So on the green scale, we're going backwards, but also the ability for pricing now, it's more manipulated because we are no longer a global player. That is correct. The United States is no longer a global player in the oil industry. We are off the table. That was taken off the table. It is going away. This is huge for Australia, though. So it's going to be hard for the Australian dollar to have a major sell-off. But right now, we're looking for at least a short-term correction. Like I said, if we get a close lower where it's at right now or lower today on an hourly basis, we'll have levels for you, but we have to wait for the signal to happen. Remember, this is forming. For all we know, the market's going to reverse gears today, make new move highs, and maybe even take out this high at 78.22. But after the close today, if we don't have our video out yet for aggressive shorts, I would say use the 78.22, maybe about 78.25 as your stop if you're going to go short, and look for a nice little test of this downward sloping support line, and we'll know if we get the sell signal later on today, well, what those levels will be. But otherwise, I would say you would probably get a good chance at getting down back towards this, not 76 even, but maybe 76.20, 76.30, somewhere around here, just below this upward sloping support line, kind of stressing it. And remember, that just would have us in a neutral outlook. Now let's look at the New Zealand dollar, US dollar. Okay. All right, what do we have here? We have... Okay, oh, cool. We got some nice people, number on YouTube watching besides Twitch. Thank you, guys. All right, New Zealand dollar, US dollar made a higher move high today. This thing is wedging, and by attrition, it's coming through its upward sloping support line. It's holding the trend intact. Is that bearish if it gets through here? Not when it goes this way, and that's just sideways. Now, remember, on the daily basis, it's been making higher move highs and higher move lows. It made a higher move high today. So key off of that, we don't have a signal here at all. Even if it was to close lower today, it's not going to be like the Australian dollar. Remember, divergence is the key to currencies this year. If you're not mindful of that, it's not going to be like last year where it was dollar-driven, whether it was a dollar bear or a dollar bull, and all the currencies reflected it. We had the coronavirus that was on the table and all kinds of other things that really just focused it on a one-way trade. There wasn't much. So, I mean, on a daily basis, you would have one up versus the other. However, the trend was very, very much a dollar-driven trade. The dollar index was basically a true reflection of dollar strength or weakness. Not so much anymore. Now we're getting back to free-floating markets. So be mindful. We're getting back to what is normal for markets behavior, whatever that really is, because it's always changing and adapting. So New Zealand dollar, US dollar, we need to wait for a signal. Now let's look at the US dollar Canada. Another oil-driven trade here. Well, what do we have here? We have a potential bullish engulfing line forming. This has not formed yet, but look at this right here, guys. Okay, so if the market closes above $1, what is it right now? It's trading $1.2682. $1, it needs to get above, yes, where it's at right now. If it's $1.682 or higher today on the close, that would confirm a short-term bullish engulfing line buy signal. Now, we will give you targets to the upside once we establish that buy signal. We have not established the buy signal yet. So now the good thing is for all of you guys that are paying attention today, it's close to 10 a.m. We're not going to jump off here. We got a lot to still cover here because we got some interesting stuff happening tomorrow. We will be doing a big live webinar interactive event that we've been promoting across LinkedIn and across our institutional and commercial networks, and I think you guys are going to be really interested in it. The nice thing about it is, remember I said today, these signals we've been looking at that are forming, by tomorrow they will have formed. So real quickly, I want to show you guys, and I'm going to give you guys access to this right now. If you go to LinkedIn and you go to our company page, Forex Trading Unlocked, okay, we always release our current videos. Like when we do the thing on Wednesdays, we put it out there. We put out our weekly and daily analysis. We'll even be putting out a link to this video also for you guys. So if you guys are wondering how to really get involved with Forex Trading Unlocked and get the signals and know what's going on and get access to a lot of really good Forex and also futures and other trading information, follow us on LinkedIn, and you just go to Forex Trading Unlocked Inc. or just Forex Trading Unlocked, and you'll find our company page. And as you can see, we have just under 8,900 followers throughout the industry. Well, we have an event that's tomorrow at 10 a.m. So if you guys are around, I want to share this with you right now. I'm going to give you the link to this. So you can go tomorrow and watch us for this webinar, and it costs absolutely nothing, all right? And you will be able to view us. All right, so we've got this here. I'm going to go and give this to you guys. For all you Twitch followers out there, I'm going to put this out right now for you. So this is our webinar for tomorrow on February the 17th at 10 a.m. So we will be on TFNN at 9:40. You can see me live on there with talking to the guys. We're going to talk about the markets. And right after the oil numbers, okay, that's tfnn.com. You can find them on YouTube. Like when you go to our website also, Forex Trading Unlocked, when you go to our website here, you can click on this, and you can find access to that link also, just to make sure that you are on board with that. Okay, so I just sent the link to you guys on Twitch, and now I'm going to do it to you guys on YouTube. This takes just a second. I got to cut out a couple words here. All right, let's get rid of this. This should be enough for you YouTubers. All right, for you YouTubers, there is the link also. So tomorrow, remember, at 10 a.m. Central Standard Time, which would be 9 minutes from now, it'll be 24 hours from then, we will be going over all of these signals, whether they did or did not form. It looks like right now, with the way things are going, we're going to have a lot to talk about tomorrow. And it's going to be a fun webinar because right now we have signed up 263 people. So if you guys that are watching right now join it, if all you guys show up, that'll be over 270 Forex traders to interact with tomorrow through our YouTube and Twitch streams and Mob Crush, wherever you are watching us. We will be streaming out to all of you guys. This is not a restrictive thing. You do not have to pay for it, but it will bring together a large group of like-minded Forex traders and futures traders that are interested in swapping ideas with other traders and information about what's going on. So it'll be usually when we do things like this, we have some good questions and we also have some good statements and information to relay out to you guys. So we'll see. You never know who's going to show up. So it could be some people who I've been active with in the business for 10 years or maybe even 25 or 30 years. Who knows? It'll be interesting to see what happens. So right now, US dollar, Canadian dollar, we are looking at a potential buy signal. Sorry about that, folks. I knew there was something I forgot, and I got turned off the landline. I didn't turn off the cell phone. Okay, so we sent you that information, and by the way, always remember to go to Forex Trading Unlocked and check out when we have these things posted also, if you're not going to follow us on LinkedIn. But we would like it if you do anyhow. So, in fact, what I'll do... Oh, actually, you got it. You'll be able to find it when you sign up, when you go to that link there. Okay, so with the US dollar, Canadian dollar, let's go now to US dollar, Mexican peso. How many of you guys are looking to go on spring break or have kids that are getting ready to go down spring break in the next month or so? I heard supposedly that schools are canceling spring break. Yeah, right, sure. Like the kids aren't going to blow off school for a week and go down to Mexico. So we do have a very bullish move here in the Mexican peso. Now, this is the interesting thing about the dollar. Remember I told you the dollar index, because of the pound and its weight on the dollar index, it's going to, for instance, if the dollar is bullish against all the currencies in the world, but the pound's going the other way, that's going to keep the dollar index from looking very bullish, the dollar, or bearish conversely if it's the other way, because of the pound's impact and weight for its influence on the index. But since we've been looking at all these smaller currencies, there's still major ones, but there's the lesser ones, the degree of dollar strength today is very impressive. So as we looked at the Canada, and now we look at the Mexican peso, this is a very big move to the upside. Now, the market has been an overall bear for almost a year. right now it looks like it's trying to bottom. It did make a lower move low, a lower move high, but it made a higher move low. So we're keying off this 1987 level for the peso from last Friday, from actually yesterday. Any trading below there has us back on the bearish campaign. Right now, I think we're more likely, as we're wedging here, to take out this downward sloping resistance line and make a challenge for $20.60 pesos to the dollar. How much above here we can get? Yeah, I wouldn't get too overly bullish with this one. However, it looks like if you're getting ready to go on spring break, don't buy your pesos yet. I think you'll get a better deal over the next week or two. And especially if we do get above 20.60 pesos to the dollar, I think you're going to maintain an upward trend, corrective trend for sure, especially if dollar strength is coming in with a lot of the other markets. Now, it's a mixed bag of goods when it comes to commodities and stuff, but here's the thing is, as the pricing of inflation and oil and transportation starts to really creep into the market, the ability for U.S. consumers, even Mexican U.S. consumers, to import from Mexico will start to diminish. The cost is going to rise significantly. We know we already have food inflation. It's already creeping into your markets. Most people aren't noticing it as much because they're decreasing food sizes and keeping the pricing the same. But everything from seafood to, I don't care, even if you're a Costco customer, you can see the fact that inflation is here. So prices are either going up slightly or the prices are staying the same and the quantity is actually being reduced significantly, which is the same difference. So inflation is here. It is not going away. I think it's going to weigh a lot on the Mexican economy. They have their own basket of goods, of issues, and especially as world travel, if we continue to have lockdowns like in the UK, people from the UK aren't going to Mexico, and they're not coming back with the restrictions. I mean, people are not going to put their lives on hold just to go to Mexico for a week, as much as they want to. But if it's going to mean that they have to quarantine coming back and going forward, that's how many. I mean, I know Europeans get holidays, but I don't think the people are going to spend 1 week on the beach and spend 4 or 5 weeks in a restricted hotel room, and especially for the costs of that, So these are the things that are going to weigh on the peso as we move forward. Let's see what else is going on. Now let's go back to the euro US dollar and see what's happening now. All right, well, we don't have very much action. It is going a little bit lower. It's kind of quiet on the day. Not really much to say. Let's look at the bonds right now. Oh, wow. 30-year bond down now a full handle, 24 pips. So it's making new lows. That's a big deal. That's a huge deal. Like I said, the dollar is going to get strength from that interest rate move. You know what? Since we're talking about this, let's take a look. And when you go to our navigation bar, just like when you go to Tools to download that NinjaTrader platform, you go to our markets. We're going to go past Forex. We're going to go down to Futures. And we're going to take a look at, now, due to market regulations and data regulations, unlike the FX market, which is only in a slight delay because we're streaming, we have the futures market, which can only be in delay because you have to be a paying customer to have data, to view data that's live. That's regulated for those of you that are unaware. All right, so weekly Treasury bonds are up here. Let's move to the daily. All right, the Treasury bond market was closed yesterday until the evening, and it tanked. So at $1.6506, this is where it settled, making new move lows. This was yesterday, 165.06. They're trading at 164.15 right now. So that's almost a full dollar lower than it was in the night trade last night. So that bar right there is actually today's trade continuing forward. And so that puts you $1.14. Let's see, it's $1.64.15. So that puts it right here. So 64. So right where this line is right here. So I'll put drawing a line here just to give you an idea. 164.14. All right. So right now, currently, this yellow line here, that's where the Treasury bonds are at right now. Look at this. Bear, bear, bear. Newer move lows, newer move lows, lower move highs, lower move lows. Indicative of what? A bearish trend. that means the dollar is going to most likely keep strength as long as the interest rates keep on puking and the oil rate keeps on going up. In fact, since we looked at the Treasury bond market, let's pull up Forex Trading Unlocked, and we'll go down here. We go down to commodities. All right, now this has all the different, we have the meats, we have the grains, we got the softs, we got the energies, we got the metals. Let's take a look at crude oil here. Crude oil as of the nightly trade. Look at this. We popped $60 a barrel on crude. If you think you're paying higher prices, which you are, than you were definitely a month and a half ago, let alone just 3 weeks ago. I mean, just in February alone, oil's gone from 52 to 60 bucks a barrel. That's a huge jump. It's almost a 10% jump in just 3 weeks, folks. That's huge. This is an accelerated rally. This is a bull. It is not going to stop. There is no, look at this forward curve here. This is so radical of a slope here, the way this is turned. You just don't see this. You just don't see this at all. Like, it's rare when you see this. And with oil right now, let's see, where is it at today? Yeah, it's going to maintain this trend. Okay, so remember, as oil continues to rally and the 30-year Treasury bonds continue to break, meaning higher interest rates, higher oil, that's going to bring in inflation. So here's the other thing too is, as interest rates go up, the cost of carry goes up. Now, I don't know if any of you are familiar with the term cost of carry. All commodities, once they leave, say, like when corn leaves the farmer's land, when oil is pumped out of the ground and it starts to be transported and moved, whether it not be even before the refining process, any physical, gold mined and transported, whatever, once it is out of the ground or harvested, there is a cost of carry, okay? And usually you have to store stuff while you're in transport, no matter what. There's an interest rate for that because you are paying forward. So when they move, they don't pay right away. So you're charged X cost for the delivery or the holding, but there's also an interest rate. It's finance. So you have to pay X amount, and as you pay that, any unpaid balances, there's an interest rate. Obviously, you understand how credit works, but it's a credit-based system for how you move commodities, because you couldn't just be exchanging cash every single time or making transactions. So they do it in that fashion. So the cost of carry variable now is going to go up. So any excess oil or food sitting anywhere that is either in transit or being held before its delivery date, the cost of that is going up. Now, obviously, if that cost goes up, who does that impact? That impacts the consumer. So that will hit you at the food price, at the food counter. It'll hit you at the gas pump trying to get to the food counter. It's going to impact you refinancing. If you did not refinance your homes over the past, you had the best chances ever up until November of last year. If you actually, basically, it was when COVID hit. If you didn't refinance between the spring and the fall of 2020, you are probably not going to see those rates again. The only thing that would change things is if all of a sudden Biden says, you know what, we're going to start pumping oil again. We're going to open up the pipeline where this is just, we got to do this slower. We have to actually think about how we make a transition from oil instead of just cutting oil and destroying jobs. That's what they have to do. That smart thing would do is to transition away from oil, which is what we've been doing slowly. That's why oil is going down in price and it's been keeping inflation at bay. But see, remember, your economists, they always say we need to maintain inflation. You know why you need to maintain inflation? Because that's an economist view of how things are supposed to be. Think about it. Do you think you should pay more for an apple every year from moving forward, or anything that you buy, just because time goes by? No, that's the most ridiculous concept in the world, but we're not even going to get into why economists have that, because it's more political than anything. So it's about trying to break the free market. So it puts an artificial forced inflational strain on the markets. It's done by design. So as these things all add up, so right now we basically have a war in the free market system that is pushing and driving shortages and also higher pricing. This is not a political view. This is just math of how things work. It's the dynamics of how markets move, how supply chains are interrupted, and how currencies are impacted by it. So as we are talking right now, we're getting a nice little rally here in the Euro US dollar. So we talked about a bunch of trading signals that are forming today. We also got you the link here for tomorrow's webinar. Remember, tomorrow at 10 o'clock. It's now 4 minutes after 10. So this time tomorrow, 24 hours from now, we will be having this webinar. All right, we got some questions here. Hi, I'm new to trading. I'm just tumble on your live. Oh, nice to meet you. So this is one ton gaming. Nice to meet you, guy. You are new to trading. Cool. So keep following our videos. If you got any questions, you just go ahead. Don't be afraid to ask. Doesn't matter if you're a newbie or not. That's what we're here for. And also go to, if you haven't already, subscribe to our Twitch or YouTube channel so you know when our videos are coming out. And tomorrow especially, we got the live interactive Forex Strategies webinar at 10 a.m., which is going to be on YouTube, Twitch, Mob Crush, also on Tumble and what have you. It will be pretty good. It's going to be a highly interactive video webinar because we have, hopefully, if everyone shows up, we're going to have over 200 people online for the chat. Okay, Lolly, let's see. Sorry for being off topic, but you thinking you look at, yeah, US dollar gold? Absolutely. For sure. All right, this is for Lawye on YouTube. All right, this one's for you. Let me pull up the US dollar XAU chart. Okay, so XAU US dollar. All right. Okay, we got the daily here. Let's go to the weekly first. Okay, so what do we have here with the gold chart? You know, it's kind of funny. Lawye, I don't know if you are catching the beginning part of the webinar. Before we have our 10 a.m. broadcast on our networks and streaming out at 9:40 Central Standard Time, I will be on tfnn.com, and the guys that run that show, we talk about the oil numbers and the currency markets because they all come out right around that time. And also, they're a big gold guy, especially the one guy. Gold is his specialty, so we always talk about that interrate relationship because the gold and the yen actually have a big relationship. So you wanted me to pull up the chart, and here it is. We got the gold market in a little bit of a retracement. Okay, so why is gold suppressed? Why is it having such a hard time lately? Well, one of the reasons is what we were talking about earlier. If you guys have been listening, when I talk about the 30-year Treasury bond and interest rates are a function of currency pricing. They're also a form of also a valuation for gold also. They do have an impact. Why is that? Because there's gold storage. It costs money to store gold. There's an interest rate factor in the cost of carry in the production of gold and putting it into supply, and then there's also a cost of carry of supply also, just maintaining. Like, it's like I always tell people, I look at gold and Bitcoin as the same thing. I think that all the money in gold is through gold stocks, equipment that's used in mining. As I always say, it's like the Levi's model. It's like the miner 49ers. The money is not in the gold rush or in the gold. It's in the picks and axes, the genes, and everything that it takes for the people to produce the gold, move the gold, and maintain the gold. That's where the money's really at, because gold isn't going anywhere. That's where all your risk is. But the other things, they're not going anywhere. There's no risk in that. I mean, there's obviously a risk in mining that you run out of gold to mine and things like that. But in general, in the main focus of things, same thing with Bitcoin mining. Like, where's the money? Well, in the technology, selling that right off the bat. Those companies, anyone that makes the machines and the hardware and for those operations, there's money in that right there. Also in the power, anywhere you're selling power to where they're mining, that's a big thing too. So that's where the money is, or at least that's where you are guaranteed to have opportunities and not have to worry about the pricing. So enough of that. Where's gold going? Well, it's really sideways right here, that's for sure, huh? We don't have anything to go on here except for this. Lower move lows, lower move highs. That's the way we've been trending. As far as today so far, we are lower on the day. We bounced all the way back. So what I would do is key off of this. So this is currency too. If you look at it, the US dollar gold, that is a cross. It's just a physical versus the dollar. All right, so $1,855 here, I would say this is your upward breakout level. Let's just go with trend dynamics, all right? This is for you, Lai, and anyone else that's paying attention. Remember, the trend is always your friend. This market made a high here and made a low here. It made a lower move high-ish around here, lower move low here, lower move high. Right now we're looking for a lower move low. The trend is your friend. So we are looking for a breakout to the upside here. This would take us off the bearish trend, or we are looking for a test of 1784 and meaning going lower. Especially with the price of oil going up too, what does that do to the price of mining? That price of mining goes up. So that means that mining gold becomes more expensive. It becomes more restrictive. So until supply starts to impact supply, which might lift prices again, I think you're going to see a suppressed value in gold, because those that truly hold and produce, they don't want to hold it. They want to get rid of it. Their whole point is to find it and sell it, or mine it, mine it and produce it and sell it, or drill it and, what have you. If they can't do that, then all of a sudden it changes everything. So right now, lower move lows, lower move highs. The trend is your friend. Let's look at the hourly. Okay, so on the hourly short term here, I would say maybe for the next couple hours for the rest of the trading day, sideways, maybe even a little bit higher. I think you're going to have problems here around this 1830 level. You might have a choppy range trade between 1820 and 1830, but if we start to head south again, especially if we run out of gas here, this might be a good area to sell should we get up into that area. I'm looking more of a test of support than for a rally. So if that's kind of clear to you, especially with dollar strength, if like I said, if we can see a continuation of the trend in interest rates, where 30-year continues to press lows tomorrow, oil continues to press highs tomorrow, especially with those oil numbers coming out, well, we might see this going down. Now here, what's interesting? Since we have the gold, you're a gold guy, you want to know about the direction of gold. Let's also look at the yen chart. Let's go back to this one. So let's go JPY, USD. Look at this. Instead of doing US dollar JPY, which is how we normally look at the currency, let's look at it as we did the gold price, okay? JPY USD. Looks very similar, doesn't it? Remember when I said there's a relationship between the yen and gold? The yen made a lower move low, meaning a higher move high, because if we go to US dollar, JPY, this is the way we're used to looking at it. See, it's the inverse of gold. Now, you did XAU USD. If you go USD, XAU. Oh, wait, we can't do that. I'm sorry, we have to go, back to this. US dollar, XAU. Oops, what am I doing? XAU, sorry, US dollar. All right, so let's blow this up so this looks kind of clear to you. All right, so if we just go from the beginning of 2021 and we look at where we're at right now with this chart right here, now let's go back to the JPY USD. Look at that. Identical practically. I mean, not completely identical, but the waves, it's topped out here at the beginning of 2021, had a harsh break, then it had a nice little bounce, established a lower move high, and then boom, it fell out right here. So let's look at the dates here. So this is February 5th is where it bottomed right there. XAU USD. And this bottomed on February the 4th. So you can say, is the dog wagging the tail or is the tail wagging the dog on any given day? Who knows, okay? But it's interesting right now, if the US dollar yen, or excuse me, the yen over the dollar is making new lows, this one's bounced back. I would say that you should probably be leaning on the short side of this one, because as long as the US dollar, or excuse me, the yen continues to be in its free fall versus the dollar, you're probably going to be hard pressed to get a big rally in gold. So does that help you out, Law? I hope it did. I hope you gained something out of that, and especially all the rest of you. Remember, I think one of you guys, Captain Will, you said, do you show the technical indicator you use? Well, I just, as you see, I use the markets to figure out my pricing and direction. So yes, I do show you the indicators that I use. And as you can see, The yen, US dollar yen, is also a good indicator for the dollar. That's why I mentioned the show that I'm on Wednesdays, because the head guy from TFNN.com, Tom O'Brien, he has a gold report, so not to give him just a plug today, but I am, and those guys are great, and we talk about these things. That's why he brings me on the show to explain to other people why we have this relationship with the yen and gold. So just like I always say, if you want to know what the market, just like the question Captain Will, a lot of people ask me, and these are veteran to brand new traders, they say, what is your favorite indicator? What do you use what is your best way to indicate which way the markets are going? And I always say the same thing. I'm like, I always look at the market. The market and the markets are the best indicators of market direction. It's price action. All right, we got a new question here from Kiki Boo Bear. Okay, nice name, Kiki Boo Bear. Also new here. Wasn't sure when to ask. Any thoughts on IG Forex platform? Off topic. Actually, that is not off topic. It's a Forex question. IG, absolutely. If you go to, let me show you this real quick. If you go to our YouTube channel, Forex Trading Unlocked, you're going to get this. Okay, this is our screen here for Forex Trading Unlocked. And then as you go down here, featured channels. The Nadex, we do work with them. The Nadex is owned by IG. IG is, there's only a few platforms that you can use in the United States to trade the markets. So we endorse FX, or not FXCM, excuse me, Forex.com. They are based out of, that's Gain Capital, which is now actually FC Stone actually took them over. So IG is one of the only character. I don't know if you're in the U.S. or not. You can, if you're as a U.S. citizen, you can only trade through Forex.com, IG, or Owanda. If you're not going to trade with Forex.com, which is now International FC Stone, which is originally a futures FCM. I remember them from the trading floor days. IG is a very good platform. I happen to be the ones that own the Nadex, which are binary options. It's a binary options exchange. And if you are FX traders and if you do trade binary options globally, I highly suggest that you stop, and if you're going to trade binary options, you only trade the Nadex options or the CBOE binary options, because one, they're regulated, and two, you get the real pricing and real deal. You do not get the spreads are very bad with other platforms, but IG, as far as Forex pricing and solid company, absolutely. I deal, like I said, with the Nadex, which is a company they own. So as far as FX, in fact, if you go on my YouTube channel, Forex Trading Unlocked, we have a whole thing here for it's the Nadex. So we have a playlist. So if you pull up this Nadex, you pull up the full playlist, and you can sort them and see all of the different webinars that I've done for the Nadex exchange, which, like I said, once again, is owned by IG. So yeah, I do endorse them. However, I don't have a partnership relationship with them like I do with Forex.com. But as far as a good competitor and what have you, I have to say, yeah, I endorse them for sure. I would say I don't have anything bad to say about them. As far as Owanda, globally, they're very, very big. I am not a fan of them because of issues they've had over the past, and I'm not really happy with a lot of how they treat their customers, especially when the markets are really flying all over the place. But they are one of the only deals in town if you are a U.S. Citizen. Now, Kiki Boo Bear, I don't know if you're outside of the U.S., then absolutely stick with IG or Forex.com. Please do not go with any other carrier. You're less likely to get good latency for one, which is a big deal. Your spreads will be wider. Don't be fooled by them giving you better margin deals and better leverage on your the different size of positions that you can have. So cool. You're welcome, Kiki Boo Bear. And please, if you haven't already, subscribe to our YouTube channel and our Twitch channel, and definitely follow us, whenever you got time on forex-trading-unlocked.com. And any questions you got, just spit them out while you're on the chat here. And even when we stream, there's times where we stream out replays of videos, and we check our chat room. Sometimes we're around while we're doing work and it's playing, and we will interact with you. And then there's other times where we will just read back on it, and we will bring them up in our next videos or where they are pertinent. So let's see, do we have any other questions on YouTube or Twitch? It doesn't look like, or Tumblr, no. All right, you guys have been great so far. We appreciate this interaction today. So that's okay. So we got a nice little lesson here on the gold and the yen. In fact, for all you guys that are watching here today, when we talk tomorrow, I'm going to make a special note about that, about doing the gold yen cross trade. This will be a good discussion where other traders that are veteran traders from the gold markets and the commodity markets and even the yen. Well, I think from the list, there's definitely some old CME currency traders that are going to hopefully be chiming in and giving us a little bit of commentary. You might have some jokes. Every once in a while, I get some of the trading floor guys, and they usually like to make a couple of comments that I usually get a couple laughs out of some people. So, but that's all fun and games, and we're all about that here, so especially with our old buddies from the floor. All right, so let's see. Let's go and look at what's going on with the Euro US dollar right now. So like I said today, this turnaround Tuesday still continues to go on. The US dollar is moving in a nice way. Oh, you know what we never did? We never looked at the dollar index chart. Can you believe that? How did we forget that? All right, so we have here February the 15th. This was yesterday's action, as you can see. Now today it actually made a little bit lower move low, and now it is higher on the day due to what's going on with most of the currencies except for the pound. Remember that this market has been making higher move highs and higher move lows. It has not taken out this low right here that it made back on January the 22nd. Until it does, the trend is your friend. Remember, overall, the dollar is a bear. But I think neutral to higher is going to be the game plan. Now, as far as rallying significantly, I would say as long as, remember, the British pound, US dollar, as long as this raging bull continues, because of the fact that it has such a weight in the dollar index, you're not going to be able to see the dollar index carry you in the direction of where you're going. So let's do a quick lap around the world and see what's going on, see if we get any other questions. All right, so we're looking at the pound US dollar coming off its higher move highs once again. If you're looking to be an aggressive short, I would say use this $1.39.5 high as your risk level, a couple pips above it. Because if the market gets above there, I mean, this is a grind. You know, just like you don't want to try and catch a falling knife, you don't want to try and get in front of a one-way freight train to the upside, you know. And wait for a signal. We don't have a valid sell signal yet. When we do, now here's another thing. They don't always work. If you read the book High Probable Japanese Candlestick Patterns, which I told you about, they don't always work. We had a sell signal here. We had a sell signal right here. And let's see, where else did we have one? We had one also right here. Okay, so 1, 2, 3 sell signals that did not work. Now, typically, when this came into play, this first one, by the ruling of how I usually trade these signals and use those, like Captain Will, you want to know what's my indicator? My indicator is usually these patterns. When these things came in here, this one you were selling it in the hole right off the bat, never really had much ground to work with. This one here, pretty much the same thing, it was a grind. However, if you follow the rules that are in my book, there are times when you do not take the signal. And one of the reasons is the oil trade. Remember how I've been talking about oil and interest rates? Now, a lot of people are like, why does he always bring this into the mix? Well, all the experienced guys love it because they're like, this is really all interrelated. When the oil market was railing like it was, and knowing that on January the 20th, that there was going to be executive orders that would already start to mess with the oil industry because that was the only thing that was promised, and it was delivered, that's where these signals failed. So when this came in front of this, I knew the inauguration was coming, did not take the trade. When this came in also, right after the inauguration, did not take the trade. When this one came in, did not take the trade. Right now, to be quite honest with you, I don't care what sell signal there is for the British pound US dollar moving forward. As long as oil is going higher, the only signal I will use for the British pound US dollar is a buy signal, meaning looking for a break, waiting for a sell-off, and then waiting for a buy signal, especially if oil prices remain firm to higher. So that is the only way I would trade the British pound US dollar. As far as being a bear right now, I think you have way too many influences that are going to override you. So I don't care if the euro and the Swiss and the yen all collapse against the dollar. Unless you see a collapse in oil prices and a change in the posturing of oil, do not jump in front of this freight train. You're going to get chopped up. You're going to see corrections no matter what to the downside, but they are going to turn on your face so fast. And I would look for a lot of binary and futures options spreads to really start to light up. I would think that you can make a nice monthly income on credit spreads on any pound US dollar correction now for probably the next 6 months, 6 to 24 months at least, maybe even upwards of 36 months. You know, I would say until basically the 2024 election, you can look to be a bull for oil, a bear for interest rates, and a bull for the pound US dollar. Now that, like I said, the pound is the second biggest weight in the dollar index. So even if the dollar index rises, it will not rise that strong because of the pound. You get a sell-off in the pound, you'll see the dollar index pop like there's probably, you know, you'll be like, now what's going on? Because you'll see all of a sudden a reaction from that weight on the dollar index. But that remains to be seen. So remember, these things don't always work. If you read the book, High Probable Japanese Candlestick Patterns, we have a whole discussion on money management and how to manage these trades. And then you would see where if you pay attention to certain things like that, that's when you get off the table. Now, where we didn't not follow the signals was in the Euro US dollar, where we had this bearish engulfing line back here at the beginning of January. Do we care about oil prices when it comes to the euro? Absolutely not. Do we care about the US president when it comes to the EU? Absolutely not. So this is a free-flowing currency. That's why no matter what oil does, the interest rate equation is definitely in play for the euro without a doubt. And a little bit with the pound too, but the oil outweighs the interest rates when it comes to the pound. When it comes to the euro, oil is not an issue except for the fact that rising oil prices screw the EU because the EU doesn't have oil. And now that the UK is no longer part of the EU, they will get zero breaks on oil, meaning discounted, volume buys. That's off the table now. Big difference now. Post-Brexit, they're allies, but they are now going to be competitors and also have edges that they have to work on people, So, that being said, we have the euro back trending lower right now, coming off its higher move highs. We'll see how the follow-through is tomorrow. I think tomorrow with the oil numbers, that's going to be the big thing to watch out for, and especially it'll be at this time tomorrow when we're talking during our webinar, the Forex Trading Strategies live webinar that we will be doing at 10 a.m. And it'll be for about an hour, from about 10 to 11 o'clock tomorrow that we'll be doing this. So for any of you guys that have time tomorrow, please, all you got to do is go to our YouTube channel. We'll be streaming it, or on Twitch. If you're not already a subscriber, you can just go to our channels and watch it there. Or if you're a subscriber, you'll get the email link, so you'll have a little warning ahead of time. And then also remember, on the LinkedIn page, if you follow us on LinkedIn for Forex Trading Unlocked, you can find out our strategies, or the sign-up link for here. It'll give you a direct access to it as well. All right, so now let's go and see what's going on with US dollar Swiss real quick. Okay, still making higher move highs. Now here's a nice little thing that's going on here. A positive close like this helps to really solidify this bottom here, at least in the short run. It will raise this right here, this 88.36 level, to this level right here. Okay, and this would be key to figuring out whether or not the dollar strength is going to remain or if it's not going to remain. I'm looking at right now that you're most likely going to see some follow-through over the next trading days, over the next 2 trading days, into Thursday afternoon. After that, Friday, I don't know. We'll have to see. Between now and Friday, a lot's going to happen. We have to wait for unemployment claims on Friday as well. This is another big thing too. Okay, unemployment. I've been a bond trader since I started trading 30 years ago. Unemployment is one of the biggest bond days of the year. When it comes to economic numbers and stuff like that with currencies, I look at them, but I don't give them as much credence as I do as far as I always say, well, if it affects the bonds, then it'll affect the currencies. If it doesn't impact the bonds, it's not going to do anything to the currencies. Thursday's unemployment claim number is huge. Now, here's the thing is, it's going higher. It's going higher. There's just no reason to not think that it is not going higher. Ironically, what is going to happen with the Treasury bonds if unemployment claims go higher? You're probably going to see the Treasury bonds trading down around 100. If they're trading now at 164.14, in fact, we can go and look at that. They're actually at 164.09 right now. So the U.S. Treasury bonds now are at 164.09. That's where they're now trading. They will most likely be trading, and I'm going to put this down on a weekly basis. So look at this. See this high right here? This is big. I told everyone 167 down to 168 is the key threshold. Trading below that really has this interest rate on edge. This is a multi-month, multi-year low now. Okay, this is a big deal. This is a big, huge thing as far as what's going to go on with the Treasury markets and currencies. A higher unemployment rate on Thursday, higher unemployment claims will probably have us trading down to, I would say, around 162. 162 even, or 61.30. That's fine. So 162. Okay, right around there. So this would be a very good area around 161.30, 162 to see the market get back down to. This would be probably, we're going to start to see a little bit of basing, kind of like what you have here, and spiking around. But overall, this trend is now going lower. We spiked high back in March of 2020, and this high right here, that's probably it. Most likely that's done. Remember how I said if you didn't refinance between the spring and fall of 2020, this here in August, when they were talking about record low interest rates, never been that low before, the Treasury bonds at that point were at $183. Now they're at $164. It's a $20 move in the bond market, folks. That's huge. A $20 move in the bond market, that is a monstrous trend directional move. The high is in. It's over. I hate to tell you, folks. We may see a rally over the next year or so if with the buying that the Fed has to come in and do. That'll get it back up to this 176, maybe 180 area, in which I'm hoping it really does, because I'm looking for the real long-term short. Like, I've already been short and I've been nibbling around on this thing. I'm looking for one last rally to the upside to sell into, and then I'm short for the next 3 to 4 years, rolling down no matter what. And that is also going to impact the dollar. You're going to see the U.S. dollar Swiss break out and go back up to this 92 half area. That is very likely to happen. Also, U.S. dollar JPY, you know what else is going to happen? You're probably going to see this also continue to rally to the upside. You'll probably see the yen back up around 109, 110 area within the next 6 months. Especially as interest rates collapse, and gold, if that continues to go down as well, that's another big thing. If that goes down with the yen going down, think, where's the money going? It's going into dollars. That's where it will be going. It's a flight to quality. Remember, there's 3 flight to quality currencies out there: the US dollar, the yen, and the Swiss. Well, if the yen is going down against the dollar and the Swiss is going against the dollar, that means there's flight to quality in what? The US dollar. As much as there's dollar bears out there and everyone's bearish to dollar, that's the biggest thing, is never run with the herd. When the herd's all saying sell, 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 most likely it's a good time to buy. And conversely, Australian dollar, US dollar, once again, we'll take a look at this one. Potential bearish engulfing line sell signal forming. We will be talking about this tomorrow for sure with the group, because we're going to have a lot of guys that trade from Asia involved also. So it's a good group that we're going to have during this webinar. Hopefully we'll have some nice participation from a lot of the players that are going to be joining us from London and also from Germany, and we actually have some traders from India. We may be talking about the rupee tomorrow. There's a good chance we'll be talking about the South African rand. The Mexican peso is definitely likely to be talked about as well. And even the Canadian dollar. So we have some interesting things lined up tomorrow. We'll see what kind of comments. It's always you never know. It's a freestyle event, and we will have these signals to talk about. Hopefully, we'll have this one. New Zealand dollar, U.S. dollar is still quiet on the day. This is a nothing trade. We'll have something to talk about, I'm sure, tomorrow. But right now, who knows? Nothing really to look at it right now. It's quiet. Got to wait for a signal. U.S. dollar peso still up on its highs. We'll be talking about this one tomorrow and what the spring breakers had to look forward to as far as a cost reduction. It'll be cheaper for them to go out and pay for T-shirts and beer. And for U.S. dollar Canada, remember we do have the oil trade that's on the table, so it's going to be hard to look at this as anything more than a short-term buy signal should it happen. If it closes where it's at right now, that would confirm a bullish engulfing line buy signal. And here's the key. A buy signal like this would be, we made a lower move low after we made this lower move low here back at the end of January. We made this lower move high at the end of January, afterwards a week and a half. And then today we made this higher move low. Well, a higher move low after a higher move high is indicative of what? A neutralizing of the trend. So short term on the hourly and into the daily, we are looking for a corrective move to the upside. Remember, we are bearish to U.S. dollar, Canadian dollar, but when you have an ABC correction now looking for a D wave up, with a buy signal like that, with a higher move low after a lower move high, these things together all spell short-term buy. Is it going to be for the next month? I don't know about that, but I would say let's look at the next few sessions going into Thursday and Friday's trade, looking for that to happen. And also, let's look at, remember we had the XAU USD, since we were talking about that. Well, look at this. Gold came back already since the yen is hanging on its new move highs. Gold is slipping. We'll be talking about this gold U.S. dollar trade also tomorrow during our video, during our live freestyle event. And let's see, who knows, maybe if the yen continues to make new highs tomorrow, then we should see gold back around this 1784 level, don't you think, guys? That'll be interesting to talk about. So we have this video to refer back to see what we were talking about today, so we can see if we were right or wrong tomorrow. It'll be very interesting to see. All right, so back to the euro US dollar for one last look, and then we're going to call it a day. Since we don't have any more questions from you guys, I want to thank you very much for your participating. Remember, anytime you want to get information, go to forex-trading-unlocked.com. Also, remember to check out our Forex Trading Strategies live tomorrow at 10 a.m. Central Standard Time, Wednesday, February the 17th. You have the link on the chat boxes here in Twitch and also in YouTube. Please sign up and check it out. Tomorrow will be a very interesting, fun event, and we'll have a lot more Forex stuff to talk to you guys about. So with that being said, just want to remind you really quick once again, if you haven't read the book, High Probable Japanese Candlestick Patterns, check it out. It's available on Amazon.com in Kindle and paperback versions. If you're an Amazon Prime reader, you can read it at your leisure. High Probable Japanese Candlestick Patterns. Learn how to apply these patterns that I work in all markets: Forex, stock, equity, options, and futures markets, binary option markets, ETFs, you name it, these signals work. They even work in Bitcoin, folks. And we may even talk about Bitcoin tomorrow as well. We didn't want to do that today because it's just, we just don't want to get into it. So I want to thank you very much once again. I'm Teddy Keckstedt from Forex Trading Unlocked, and we will see you